Welcome back to the Stock Market Options Trading Podcast. What a great discussion I've got for you today. I had the pleasure of interviewing Fauzia Timberlake, which some of you may know her from her appearances on the TastyTrade Network's Rising Star segments. She's been on there a couple times. She's got a great story. I learned a lot about her and how she uses the TastyTrade principles to this day. We're going to talk about that. She's going to share that with us, and I think you're really going to enjoy this conversation. I'm going to put all of her information in the podcast show notes. If you want to see her previous Rising Star segments, you can find that at stockmarketoptiontrading.com. This is episode 16. I'll also put it in the YouTube description if you're watching this on YouTube, so be sure to check those out if you want to learn more about her. Before we dive into the episode, though, if you could take 37 seconds and leave a review of the show in Apple Podcasts, it would mean the world to me and help trigger the algorithm to spread the word about the show. So enough about the intro. Let's get into the interview. Hi, Fauzia. Welcome to the show. How are you?
I'm fine. Hello, Eric. Thank you for inviting me.
You're welcome. So it's very nice to see you and talk to you at the same time. I know we've emailed and talked on the phone the past year or so. I'm glad that we finally kind of pulled it together. I know I moved and it took longer, for me to get settled. And I know you moved too, right? Is that right? You moved recently?
Well, it's almost a year now. I moved from California to Nevada.
Do you still have boxes in your house? Because I still have boxes in my house. No,
I'm a little bit ahead of you.
You're ahead of me. Okay. Well, I'm still working on it. So I know we're going to talk a little bit about TastyTrade because that's how I've come to learn about you. But I want to kind of back up a little bit. I know you did some years in the finance industry, and I'm always kind of fascinated to talk to someone who came from that industry because it's so different from the self-directed traders like us. So can you tell me just like a little bit about what you did, how long you did that, and then how did you kind of transition out of that? I'm interested to know.
So actually, before financial services, I was actually educated and worked as a software engineer.
Right.
So if you had to ask me, that's really what I identify with.
Okay.
But I spent some time at home raising my children, and that's when I started sort of teaching myself about the capital markets and learned how to invest in stocks and ETFs and a little bit of mutual funds. And then I had this brilliant idea that wow, I could make a career of this. So I switched to financial services. I worked for a large brokerage as a financial advisor, but the area that really interested me was financial planning. All of it interested me, actually, but I felt like as an engineer, I liked that top-down approach. Let's talk about what the person's long-term plan is, and then the investments kind of fall out of that plan. I did not really find trading options. I did that for about 12 years, but realized very early in the game that as a novice, it's mostly about marketing and very little about building portfolios. And that's really where my interest was. But I enjoyed the relationships. And finally, after about 12 years, I did quit the industry and went back to becoming a financial planner. In that interim, I discovered options just as a way to keep myself occupied while I was going to school full time. I knew a little bit about selling puts and selling covered calls, but nothing more than that. I discovered TastyTrade right about that time, I would say about 9-10 years ago. Okay. And this whole quantitative approach, probability-based approach, just kind of fit right in with my analytical, quote-unquote, engineering mind. And I liked the fact that I could be a self-directed investor, that I could control how much time I spent. Contrary to popular opinion, you don't have to be tied to the computer screen 24/7. You really don't.
Right.
I might be, because I really just enjoy doing this so much. To this day, I'm constantly learning. So I find that trading options is sort of 1 degree removed from normal investing, meaning you have an opinion on an underlying, whether you're bullish or bearish. And in the case of options, you have a choice. You can be slightly bullish or slightly bearish or outright bullish or neutral, which you can't really do effectively by just buying stock or selling stock short.
Right.
And then you use a strategy that sort of reflects your opinion on that underlying, and then go from there. I'm not a day trader. A lot of people confuse options traders with day traders.
Yeah.
I may do a short-term trade every once in a while, but 95% of the time my trades are about 45 to 60 days out.
Gotcha.
Yeah.
Interesting. So that's interesting that you were doing a little bit of trading. You were interested in finance before you got into finance. So it kind of, I was thinking it was the other way around, where you got into finance and you're like, oh, well, maybe I'll go. But you kind of started with buying and selling stocks, I guess, when you first started. Right.
Yes.
That's interesting. Very cool. So was TastyTrade kind of your first foray into options? Is that how you kind of came across them, or how, what kind of got you into options?
Yes, I knew about selling covered calls and selling puts, but that's the extent of it. I didn't know anything else. I didn't know anything about volatility, when you buy, when you sell, under what conditions, and how delta is a reflection of your exposure to the underlying. I didn't know anything about that. I just sort of accidentally was introduced to TastyTrade, talking to just practically a random stranger in a restaurant. And he said, you ought to, listen to this. And when I did, I was hooked immediately.
Yeah, they did a good job. I know I was an InvestTools student, which I think, if I'm not wrong, I think Sosnoff was still with Thinkorswim at that time. I didn't, meet him, or I didn't get to do what you did, but I kind of started with Thinkorswim with InvestTools, and I think he had a hand in on that program. But the educational side of these brokerage houses, and so when TastyTrade started to emerge, I definitely watched a ton of their videos, and Mike and his whiteboard. I love all those things, and so that's really cool. So the really cool part was in 2015. You were featured on their network as a rising star. So how did that even come about? Like, how do they even know who you are? Were you just like calling into their shows, or like, how did that even come to be?
That's pretty much it. I was so hooked. I was hooked by the personalities. I felt, and I don't think I'm wrong to this day, I felt that they really had an interest in showing the retail self-directed investor how to take charge of their investments and portfolios. And then, of course, if you watch them, they're so entertaining. I mean, I would be just cracking up half the time. So yes, as you said, I started calling in first just to ask questions, and then writing to them, and they're so responsive. I mean, Sosnoff, to this day, you would think he's such a busy man. He runs so many companies, has his hands in so many pies.
Yeah, he's all over the place.
He'll return your call. He'll return your email. In fact, I've even said to him sometimes, shouldn't you get a little assistant who helps you sort of answer the simple things? And he said, no, I love it to this day. He has a vested interest in, watching this baby that he's produced grow and grow and grow. So yes, and then the Rising Star, I can't exactly remember. I think they were talking about advertising it. And I just wrote to Tom and I said, do I have a chance at this? Because I've really enjoyed this. I think at the time I'd been doing it for about 4 years. And he said, sure. And he put me in contact with the people, ahead of that programming.
Right.
And asked me a few questions. And next thing you know, I had an invitation to go to Chicago. And honestly, it was a huge honor. I don't know what was a bigger honor, being given that title or meeting the personalities.
Well, that's what I was going to ask you, because these guys are like famous in a sense, like they're little mini rock stars, and they're not just the talking head guys like on the CNBC. Like you can just tell they're just like regular kind of people, and they actually kind of thumb their nose up a little bit at the regular financial media, which I think is great. So what was that like being in there, just talking to them? And were you nervous? Like, because I know I rewatched the old one recently because I knew you were coming on. And by the way, just for everyone who's listening, I'm going to put the links to all the Rising Star episodes, all her stuff in there, so you guys will find that. When they're asked, I don't know, I would just be really nervous. So were you nervous or a little bit?
I think I was a little nervous about having a camera pointed at me.
Right.
But I wasn't nervous around them, and they, within seconds, when the horsing around starts, and Tony and Tom, I cannot tell you what incredibly lovely people they are. Their heart's in the right place, and they're not too serious, and yet everything they produce is, excuse my French, very serious, right? They produce hours and hours of research and content. In the early years, I would just spend my entire evening just watching. All day I would be listening. All evening I'd be watching it again and again. And
Are you like me? So where, and this is how I am with books too. Like I have to watch and read things, and maybe because it's technical. I think with technical things, I might watch the same video like 5 times over the course of a couple of weeks just to really let that sink in. Where are you like that? Or maybe I'm just a slow learner. I think retainment is sometimes hard to retain some of this stuff because it's so technical. And when you start watching some of these videos, when I first watched their videos, and this was years ago, and they really, and I don't want to say the Greeks, but when they really got into the nuts and bolts of some of these concepts of the time decay and where on the curve the time decay is, and a lot of the research they were doing and comparing the volatility between different indexes, and it was just like, it was pretty nerdy, and I loved it. So it was very very cool. So were you like that, where you just consume, and you just reconsume the same content until you get it? Or did you pick it up like super fast?
No, pretty much what you're saying. It's a huge body of knowledge, of lots of little facts and data that all sort of come together, but there's no way you can learn it all in one go. It's an iterative process. So sometimes I feel so lucky that I started when I did with them, because today I don't know how overwhelmed I'd feel, because they've grown. He's got maybe 20 data scientists working for him, all with PhDs in math or quantitative data analysis or whatever, and they just churn this stuff out. And but yes, no, I would watch it, and on their website, all the programs are archived, and then you can also create playlists.
Right.
So I would create, I've got maybe 30 playlists. Every time volatility was mentioned that I didn't know about, I would just stick it in the various playlists and then go back and watch those playlists, everything about volatility, all in one place. Yeah, but to the novice or the new beginner, I don't want to scare them and think that it's so overwhelming that they can't start. Not at all.
Yeah.
Everyone should, you start with some basic knowledge and then you just keep building on it. You know? But yes, the answer to your question is that no, I would watch things over and over again just to kind of connect all the dots.
Yeah. Yeah, they definitely did a good job. They were definitely, I think, ahead of the time. There's a lot of great videos out there now, but they really, I think when they started bringing in the data guys, and this is one of the things I liked about them was, they've been doing it forever, and there's what's the word? Not self-deprecating, but when they started bringing in these math guys,
yes,
and they started sort of admitting that there were things they didn't know, right?
Yes.
Or that they were like, oh, we always thought it was that what the obvious thing might have been. So the fact that they were still learning and they were bringing in people to basically educate themselves at the same time, I thought that was pretty cool because that just sort of shows that, even though these guys have been doing it forever, the industry's changing, the players, who's in there, the brokerages are changing, the requirements, the fees, and all these things. It's just constantly evolving. But so let me ask you. I know we talk about TastyTrade. Can you just kind of high level go over some of those TastyTrade principles or TastyTrade methods? Just kind of a higher level, just to give the listeners, in case they haven't followed them at all, just what their kind of thing is, like what are they trying to tell you in general?
Okay, so I would say and I think there was a discussion about it this morning on the live program. There are two main things that I didn't know anything about, and that is the driving force behind any position that I would establish. And I think that they have a head and body. They're ahead of everyone else. There's never a discussion about this on any options discussion out there on even the best financial networks, is the role of volatility and the role of time decay. Where the sweet spot is, when, and also the role of volatility is connected to when should you sell and when should you buy. Regardless of whether you're bullish or bearish, that's not the point. The point is this a condition under which I should sell? And an example would be if I'm bullish and the conditions for selling are in place, then I would sell a put or a put spread. And if the conditions for buying are in place and I'm bullish, then I would buy a called spread. So the concept of volatility and what one should do under different volatility conditions, and the fact that 45 days is sort of the sweet spot for time decay. So you can sell things out in time, definitely, but around 45 days is when you will see that steep decline where the time is coming out of it, the time decay is coming out of the money options. The other thing is best practices, meaning when you choose an underlying, it might be very trendy, it might be something that you read about all the time and making headlines, but can you wet it using TastyTrade principles? And they are volume, that the underlying must trade around 1 million shares or more a day. So there's enough volume in it.
Right.
It should be a liquid. So the bid and ask spread should be reasonable. Now, of course, that varies with the size of the underlying, but on the TastyWorks platform, TastyWorks is the brokerage associated with the TastyTrade network. They will grade the liquidity of the underlying. And then you should be out about 45 days. And you should follow principles of selling or buying based on implied volatility. I would say those are like the backbone of trading the TastyTrade way.
Right. Yeah. And that's what I remember is that 45 days. I'm kind of a vertical spread person. I mainly do vertical spreads. And I probably should venture out to other types of spreads to give myself some more diversity. But I trade a lot of indexes, and mainly SPY, SPX, those type of things. And what I've found is that when you look for things like IV being a certain level, it's really hard to meet some of that criteria. So do you find yourself trading more stocks than indexes? You trade more stocks?
That's a really good question. So they don't dictate that you should create any sort of a model portfolio, but I do use indices for creating what I call a core portfolio. Okay, so that would be a market ETF, whether it's IWM or QQQ or not really the diamonds, but IWM or QQQ or SPY.
Okay.
And then I always have a position in bonds. And I always have a
TLT? TLT?
I always have a position in gold.
Okay.
So now for the last 2 years, I've started trading futures. So I may substitute options on futures or mini futures. And since then, they've started the small exchange. I don't know if you're familiar with it.
I've heard of it. I've heard them mention it. I listened to Tom's and Dylan Radigan's podcast. They put it on Wednesday. It's one of my favorite podcasts. But he's mentioned that. And I get their magazine too. They have Luckbox magazine. Yeah. So it's, I know they're doing that. I've, I'm back and forth. I've been with Thinkorswim so long that I was kind of, I just get stuck in my ways, but I might consider switching to Tastyworks just to see some of these other products that they're doing.
You will not regret it.
Yeah.
So I don't mean to put TOS down, and I think these guys had a major role in the development of TOS also, right? Design and development of TOS, and that's 20 years old now.
Yeah.
And then they designed Doe, which was on the TD Ameritrade platform, and then they separated from TD Ameritrade and took the innards of Doe, which then became the platform for their new brokerage, Tastyworks. I don't mean to put TOS down, but I've used TOS. I've also used Options Express. I'm dating myself. I've been doing this for a while. Yeah. but I couldn't say that there's a better platform out there for trading options than Tastyworks. It's incredible. When we had the March drop in the markets, right? Yeah. I have friends who not only work, but have accounts in various large brokerages. Everyone was hurting. They were shut down, for hours on end sometimes. And Tastyworks did not even have a hiccup. Did not even. It's a phenomenal platform from the point of view of strength, stability, and security. But more than that, as a user, you've got everything at your fingertips, the probability of profit when you set up the position. You don't have to move from that page, and what?
Yeah, all right. You got me thinking about it. You got me really thinking about it. I'm gonna.
You really should. Yeah. You really should. If nothing, open a small account there and just try all the functionality out. I promise you. I have, because I'm a coach now, so I have some clients who have accounts at TOS and some at in actual brokers, and honestly, it's painful for me to use those platforms.
Yeah.
And I go, how do you guys do this? How do you do it? I can put on 5-6 positions in under 5 minutes, because it's all pulled down, drag here and there. Everything is displayed for you in one line, and boom, hit send.
Right. Nice.
So it's very nice.
All right. I'm gonna get that going. I'll open up something here before the end of the year.
Yeah.
Start messing around. You're gonna have to. I might call you though for some
totally
lessons.
State of the art, okay? So you gotta give. If nothing else, you gotta give credit to the fact that it's so brand spanking new.
True. That's true. I know. I have a couple buddies who are trading. So I don't know how. I guess people trade both. Like I'm kind of like maybe just one dimensional. Like if I switch, like I feel like I'll probably just end up switching, just because why make it more complicated than it is by having to do one, on different platforms. So, but I'll look into it. You might be the one to push me over the edge to it. So
you won't regret it.
Yeah, I'm sure it's great. So what, and just, when we go back to you kind of getting into TastyTrade, what were some of the starting strategies that you really started with? Were you selling puts or doing credit spreads, or how did you start? And then what are you trading now? I guess, how did you expand across more strategies? Because I know with different volatility levels and whether you said buy or sell, like it seems like you're more diverse now, but what did you start with?
So there are only four things. There are puts and calls, and you can buy them or sell them. And every strategy is a combination of that, right? So I started by knowing that I'm selling or I'm buying. And if I was buying, I learned to buy wrapped around. I learned about break-evens. I learned that the probability of an out-of-the-money call spread is so low, right? Mm-hmm. Because I notice a lot of people just buy out-of-the-money calls, and it's kind of like a lottery ticket. Oh, I'll just buy this for 10 cents. And so probabilities became a driving force. So I started by selling puts, selling calls, and if I couldn't afford it because of capital requirements, then I would sell a put spread or sell a call spread. So that's pretty much ingrained in me, that, and also supported by research, that if you sell a naked call or a naked put, you have the best opportunity to manage it. And by manage, I mean to either get a winner on the board or to manage the trade so that you can either lessen your losses or eke out a small profit if the underlying does not comply. If I can't, so I start always with naked. Okay. If I can't afford it, so another best, it's not a best practice, but the way we learn at TastyTrade how to build your portfolio and how to maintain the capital at risk. I don't have any more capital at risk in any one underlying versus another underlying. So if I have, let's say, $100,000 account and the loosey-goosey is a 3% to allocation to one underlying. So that would be $3,000. So if $3,000 allows me to be naked, I'll be naked. If I can't be naked, then I'll buy the cheapest long I can buy. Right. And it looks like a spread, but really it's a synthetic naked, right? Right. Or a synthetic
you're just shrinking the capital requirement, but it's still pretty naked. Yeah.
And I luckily became comfortable with doing that about, I would say, 5-6 years ago. And I know that as I encounter people, they see that maximum loss infinity against the naked call, and they're like, that scares them. But I'll tell them, look, if the brokerage is willing to take the risk at this level, then I think it's reasonable that we should try to also, as long as the capital requirement is supported. So I started by learning how to sell puts and calls and spreads. And then I already knew how to do covered stock, buy the stock, sell the covered, sell a 30 delta call against it. Mm-hmm. And then I progressed to what are known in the TastyTrade world as Jade Lizards or big lizards, which are just, they may look like an iron condor because they may have 4 legs, but they have no wrist to one side. And it's a powerful tool to use because you're selling the straddle, so you're collecting a lot of premium, and then you're just eliminating risk to one side by having a spread on that side, which is covered by the premium that you collect.
Gotcha. Yeah.
That's the basic definition of a lizard. And a reverse lizard would be no risk to the downside, and a regular would be no risk to the upside. And that's it. And then ratios and butterflies, those are all cousins of each other's, ratio spreads and butterflies and broken wing butterflies. But I want to say to someone who's new and maybe listening that you can work your portfolio without having all these fancy positions in it.
Yeah. Yeah. So let me ask you. So here's something that I don't want to say struggle with, but you mentioned the position where you're like, okay, you don't have any risk to the one side. Yes. And I've seen the Jade Lizards. I don't know exactly what it is. To me, it sounds like a iron, I don't know if it's an iron butterfly where you break the wings and you end up with no risk to the upside, but, or downside, however you want to structure that. But so how much of your bias, if you will, for that stock, what are you making that decision on for that type of trade where you're saying, okay, I want the risk. I don't think I have any risk to the upside. Like you obviously have some kind of bias to where you're picking that side. So how do you factor that into all the mechanical, mathematical stuff? Because I know, like, to me, I trade a lot of indexes, and I do not do a lot of short trades anymore, mainly because that the underlying theme that the Fed is printing money and supporting the market. And COVID crash happened, and I got dinged on a couple long trades, as did most of the world. But I'm okay with that, because I know that most of the time the market is going to be saved in a certain sense. That's just, and that may all come to a screeching halt one day, right? So how do you factor in that bias with that stock? I mean, do you look at moving averages, or you use like the S&P as kind of like your indicator? If the S&P is, in not a bullish mode, but is neutral, or then most stocks will kind of follow the tide kind of thing? Or how do you factor that in? So I know TastyTrade is very mechanical, so I'm interested on how to factor in your bias with that.
So that's a super good question. And I can't even pretend to be a financial guru or understand economics, whether macro or micro, to any degree, to know which way the markets are going to go or a particular underlying is going to go. But what I learned from Sosnoff way in the beginning is all the information is baked into the option premiums for the most part, and in fact, I remember him saying once, he said, let's say Apple earnings are due at the end of the market, after the market closed today. Mm-hmm. He said, even if I told you what Apple earnings are during the market, right? You really can't predict which way the market will interpret those earnings. And right. You've seen that. Mm-hmm. It can be bullish, and Apple can be everyone's darling. And suddenly Apple produces pretty decent earnings and they shoot Apple down.
Right.
Now I'm thinking about Amazon. Amazon in the last few sessions, maybe 2 weeks, has just not been keeping up. Right? It's down right. every day. And I'm thinking, everyone's shopping on Amazon. What's the problem here? Why isn't it keeping up? Yeah. So I don't even pretend to, I just go by what the option premiums are telling me.
Gotcha.
Right? As far as my own personal, definitely you need to have an opinion. A long time ago when I worked as a regular traditional investor, I used the Peter Lynch approach a lot. Like wherever I was, whatever service I was using, whatever product I was using was my favorite. Starbucks and Nordstrom's. I pretty much started in the Northwest, and Costco and Amazon. Yeah. These were all Northwest stocks, right? And they were just coming up, and it was state-of-the-art technology. And I was like, oh, these are my favorites, my darlings. You have to have some kind of an opinion, but it has to be reasonable. So if a stock is dragging, so I'm going out 45 days, so I look back only 6 months. Okay. You can use technical analysis. You can use fundamental analysis. I don't use either, but I do look at the chart. I look at the chart, and if it's kind of dragging a bottom, I say I'd like to be bullish. And if I want to be bullish, that means I'm taking risk to the downside.
Okay.
If the stock is off the charts like Costco was until today, big move up, no real reason why, maybe an analyst gave it a bump up, but it's flying off my screen, I'll sell a call ratio.
Gotcha.
Okay, right. I could be wrong, but you've got to start somewhere, and everything in between, I'll be neutral or I'll skew it a little bit bullish or a little bit bearish.
Right. So you're, yeah. And I totally agree with what you're saying in the sense of the options market seems to know more than the price, it seems like, because technical analysis side, the mantra is the market knows all the information is in the price. Yeah. But the options sometimes don't reflect that, and that's when you get into people who try to follow unusual option activity, something that's sort of leading. I don't really follow that, and it sounds like you don't either, but I totally understand what you're saying about you do need to have a little bit of an opinion, and that those options are going to tell you whether it's the premium or the skew or whatever is going to kind of help dictate what you trade.
Need an opinion, and you need market awareness. You can't be in this area of investing your capital and it's not about an interest in making money. It's about an interest in the markets and what drives things and what results come out of it. And I think that's important, but it can be developed with learning and reading and listening and watching. And then a little bit of what I call your gut feeling, your sentimental feeling or whatever, and then go from there, right?
Yeah.
I do look at the skew. So that at the equidistant puts are always worth more than equidistant calls from the out money, because there's always more fear to the downside. Every once in a while, you will encounter where the call is worth more than the put. And I interpret that to just mean that the markets are more bullish on this underlying. They are putting more value in the calls. I use that. That's when I will sell a Jade Lizard. So why not just sell a put if you're bullish? Why sell a call spread? Because there's extra premium in that call spread to be harvested. And so there's a specific condition under which I sell a Jade Lizard. Otherwise, just sell a put, sell a 30 delta put. As far as being afraid of, I have no way to say which way this market's going to go. I don't think anyone knows, right?
Yeah, I gave up on that a long time ago.
So I stick to the probabilities, and because you're a seller, I'm a seller mostly. Though sometimes it's hard because volatility dries up, and then the conditions for selling just don't exist. Time is on my side as a seller of premium. So every day that goes by, I could be wrong to a certain degree, but still make money. Right. But when you're a buyer, there's no room to be wrong. Yeah,
that's true.
It's got to move in that direction, and it's got to move quickly.
Yeah. Interesting. Yeah. So I know, we in 2019, you did a second kind of stint on the Rising Star where they had you back. So I was going to ask you, when I watched that episode, you had mentioned a couple, I don't want to say newer strategies, but things you were maybe doing a little differently. So how has your trading evolved from those early days? And I say early days, like in the early TastyTrade days from maybe 2015 to now. Is there anything you're trading more of? What's changed for you over the last, let's say, 5 years?
I would say that the use of option synthetics has really been an area of interest for me. So that's just meaning creating a synthetic position. So an example I would give you would be a covered stock position. You buy the stock and let's say you sell the 30 delta call, right? So now you have a 70 delta position, exposure to the underlying. You can create the same scenario synthetically by selling the put that's right across the aisle from that 30 delta call. That's in the money put, right? So you want the same thing to happen in both cases. Let's say you bought the stock at 40 and you sold the 50 call. You want the stock to go beyond 50 by expiration so that you get your maximum profit out of it. If you sell the put that corresponds to the 50 call, you want the exact same thing to happen, right? You want even though it's in the money, you want the stock to rise and go past 50, and then you get to keep all your premium or whatever fraction of it that you decide is a good enough profit for you.
Interesting.
When I started using option synthetics, it just sort of opened up the world to me. these are just little mathematical tools that I can use to create a delta position, and delta tells me what my exposure is. Another example would be if you want to short the SPY. Not very many people can afford to short the SPY. The account size just doesn't permit it.
Right.
So the next less expensive thing to do would be to have a covered put in the SPY, right? Well,
Okay.
not a lot of people can afford that either. So what's the synthetic equivalent of a covered put is selling the call that's across the aisle from that short put. That's an in-the-money call. Now, if you can't even afford that, then you would buy something cheap and then you would sell an in-the-money call spread. The whole time your eye is on the negative delta that you are aiming for, right? If you sell SPY, it's 100 negative deltas. If you sell a covered put, it's 70 negative deltas. And if you sell a call spread, maybe you have 70 negative deltas or 65. The bottom line is they all pretty much respond the same way with a lot of difference in capital utilization. I may be able to sell 2 call spreads in lieu, right? So that whole area of synthetics, so that they get these fancy names like long delta buster and zebras and
I feel behind. I don't know all the new terms. I need to get with the program.
I think that's just tradition. You wonder where, I suppose one could read about the history of how strangles were named and straddles were named and butterflies were named.
Right.
And so we have some more now.
Right. That's funny. So I know in the I want to get back to the TastyTrade or TastyWorks, excuse me. Tell me about, because I heard they mention that you're a follow trader. What does that mean on the TastyWorks platform, that people can follow your trades? Is that what that means essentially? Or how does that work?
So not just mine. So if you have an account with TastyWorks, you have access not only to all the trades that all of the participants that work for the company discuss, 6-7 hours that the market is open, but they also post some of those trades on this page called the follow page. So that was another huge honor for me when they asked if I would post my trades there. So it's from one account, and when I put the trade on, then I publish it and it gets on the follow page.
Gotcha.
Other than myself and maybe 3 or 4 other people, everyone else works for TastyTrade. There's no charge for that. It's just a suggestion that you can copy identically right off the follow page and put the same trade on yourself, or you can copy it and modify it for yourself, increase size, reduce size, or massage it in some way.
Right.
So they're just ideas.
Right. Very cool. Right. So it's interesting that you can do that. And people can you're in the platform, so you can just take the order if you wanted to take it, or,
yes,
that's pretty cool.
Totally. And then all the TastyTrade principles also are very active on Twitter. So there's lots and lots of trades being discussed on Twitter. I mean, I don't think anyone can complain about the fact that they don't get enough ideas.
It's almost too many, right? It's almost
almost too many. Absolutely. Yeah.
So let's talk about risk for a minute. I know we were on the phone the other day, and something you said I've been thinking about how we're ultimately evaluating our risk in the market. Your risk in trading can translate to your risk in real life, and that idea, or at least the way you evaluate risk. And you said that the other day, and it's so true. And I think they talk about that in that Luckbox magazine, where you're just constantly evaluating decisions, and you learn from mistakes and these type of things. So are you constantly thinking about, and I don't want to say risk, like in the sense that you're scared of doing things, but do you find yourself like thinking the same way when you're like planning your trips and things versus like when you're in the market? It's just one big risk evaluation now your whole life, I guess.
No, that's a really good point, Eric. Yes, so just to back up a bit, every position I put on, I'm always aware of what my return on capital is, meaning I need to be appropriately compensated if I'm selling for the risk that I'm taking. Hence, I only sell in high implied volatility, right? Because I want the volatility to collapse and I want to close out my position. If I sell in low volatility, it may be a long, long time before I can ever close that position out. But to get back to your question, yes. And I remember Tom saying it a couple of times about how you will use these principles in your everyday life. And I certainly did. And a good example would be in this past summer. So we're in the middle of this pandemic and it's very scary. And we've lost a lot of lives. But I was very isolated. I had moved to a new place. I didn't know anyone. I decided that I would take an airplane trip to go and be with people I loved and was comfortable with, and know that they had been equally wary and careful of, using social distancing and masks or whatever. It was in line with mine. Mm-hmm. And then I had to get on a flight. So my risk was exposing myself to all those people. Then I looked at what the airlines were doing, and I looked at statistics on, were a lot of people dying that had been on a particular flight? And I didn't hear that or see that, and I didn't see a large proportion of flight attendants being hurt by this pandemic. Mm-hmm. So I said, I'm taking this risk. Of course, my max technical risk is that I could die, right? It's the same as that risk on the naked call, is that the stock could go to...
It goes to zero, right?
Well, if it goes to zero, it's okay because it's measurable. But if it goes to 10 trillion from 100, that's ridiculous, right? But what are the chances? So the outside risk was that I would contract something and die. But the risk-adjusted return was that I'd be with people that I love, I'd have company, and the fact that I would feel, wow, I did this. Mm-hmm. I'll take all the precautions that the airlines are saying. I will trust. There's a level of trust. And I did it, and I feel so good. And not to say I'm selling this to anyone who might be listening, but this summer I took 5 flights. Now, they were not for gratuitous purpose, like, I'm going on this fabulous vacation. No, it was more for a relief from the isolation and to go see my granddaughter and to go see, beloved members of my family. And it was well worth it. So I think about this, that, I took a measured amount of risk. And so far, so good.
Yeah.
That it's been okay. I tested myself and I'm negative, so I feel good. That was a win on the board.
Yes. When I consumed a lot of the TastyTrade stuff, one of the things I don't remember all the technical and mechanical things, but one of the biggest concepts that I took away and I still apply to my real life and my trading is that basically, fear is typically overpriced. Which is why we buy insurance. Whatever the fear in the market is, the options are always going to kind of reflect that. And most of the time that fear isn't warranted. And like you said, that volatility is going to come in at some point. Now, when there's no fear in the market, that's when you're supposed to watch out because you're like, okay, something's going to happen, right? But in general, selling the fear, it was kind of the takeaway, which ultimately we tend to be net sellers of options. Obviously, if you can buy volatility as well when it's low, but that was one of the kind of takeaways. And I apply that in my real life when something crazy happens, and it helps you kind of stay calm. And you're like, okay, this isn't going to last forever, or it's not as bad. Let me not jump the gun and make it worse, right? Like don't panic and panic sell everything, and then you realize the market recovers kind of thing. So those little micro decisions, it translates back and forth between my real life and my trading, trading stuff. So I think that's pretty cool. So this was awesome. I know you're doing some coaching, so I want to just let you talk a little bit about what kind of coaching are you doing? Is it one-on-one coaching? Because I know you mentioned the other day you were helping someone. How do people work with you, or how are you working with people? Because I know you got a bunch of clients now, right?
Yes. So I started by mentoring, because I've always had an interest in talking about financial education, and particularly to young women, because I feel like this is an area that they should show more interest in than they normally seem to do. And so I started by mentoring high school girls. This is before options even, just talking about financial literacy and education. And then when I started trading options, I started mentoring them. And you know what? This is a great way to start, establish positions, do this thing called the Wheel of Fortune, where you sell a put, get the stock assigned, start with a lower cost basis, sell a call, get it taken away, do the same thing over and over again, rinse and repeat. Then when I was on the follow page, I had a lot of people asking me questions. And one of them turned into a client. He offered to pay me if I would just spend some time with him, helping him discuss his activities and his portfolio. And I don't give any financial advice, obviously. I'm not even qualified to do so, but I can certainly tell you how I would handle a certain situation. And that's kind of how I really enjoyed that. It's one-on-one. So as you know, everything is free on TastyTrade. There's hours and hours and hours of archives and content and research. But I think the value that I was bringing to this gentleman was that it's like a personal coach. So yes, my coaching is personalized. There's no curriculum. There's no, standard format. I do it based on the person's needs, on their learning style, on the time that they make available. And I enjoy it very, very much. It's really nice to see people just overcome this fear, right? I coach any and everyone, meaning a newbie or someone who just wants to take his or her game to the next level, or they just want to talk to me about analyzing their portfolio. So it just sort of runs the gamut. But yeah, I really enjoy it. Yes.
Great. Yeah, I know one of the value coaches bring just in general is a little bit of accountability, because I know, this stuff can be complicated. And one of the reasons I created groups and started going online is to just talk to other people that are doing this. So I'm going to assume that maybe your personal friends don't know about options, or have you converted? Because I know you said you at one point you were teaching your daughter, but like just your kind of your everyday friends that, like, when you got into that, what did they say? Were they like, you crazy? That's too risky, or are you still friends with them?
Oh yes, I am friends. I think my friends would represent the population in general. Some are curious, some have been thinking about it on their own, and then when they see me doing it, they become, okay, I think I'm going to try it too.
Right.
And some just mostly don't have the interest. That's that market awareness piece.
Yeah.
They're just not interested. And if you're not interested, then this is not a place that you need to be, right? Then it's better to pay someone that you trust and that you've vetted in other ways to handle your money,
Right.
And there's nothing wrong with that at all. But if you have slightest bit of curiosity, it's a great place to explore. So no, my friends they run the gamut.
Yeah. That's great. Yeah. And it's, you can do both too, right? Like some people who want to get into it, doesn't mean you need to pull all your money out of wherever it is now, but maybe you start with something small and go through it and risk $1,000 or whatever, and just do it. And then maybe that's something that you can kind of grow into. Well, this has been great. What's the best way for people to get in touch with you?
They can follow me on Twitter.
Okay.
@Trader Fauzia. I've provided you with a lot of the information.
Yes.
So
I'll put it all in there. And,
that's great.
and you have you're on Facebook too?
I'm on Facebook. I have a Facebook page called Option Engines.
Okay.
They can call me. My phone number is right there. I can even give it out. I don't care. 425-466-1069.
You're going to get some calls. This show's starting to pick up a little bit. So, good. But that's great. Okay. So I'll definitely put all your links and information in there. I'm going to put some links to the Rising Star videos too, and I'll put all your stuff in there and I'll verify with you. So, well, thank you so much. I appreciate it. And I'm sure we'll talk soon.
Oh, thank you. And I should add, I'm also on LinkedIn. So
LinkedIn? Okay.
Yes.
Yeah. I'll get with you for sure for all the links. So, all right. This has been great. Thanks so much, Fauzia. I'll talk to you soon and we'll see you next time.
Okay, well, it's my turn to say thank you, Eric. This was a true honor. Thank you for inviting me, and hopefully I'll be invited again.
Yes, I'm definitely going to have you back on. Maybe we'll get really into some more strategies next time. So.
Totally. I'm always happy to talk about that.
All right.
Good night.
Thanks a lot.
Thanks for listening to the Stock Market Options Trading Podcast. To join our community of options traders, head on over to patreon.com/vertical spread options trading for details. But before you go, you should know that everything discussed on this podcast and in this episode is for informational purposes only and should not be considered financial advice of any kind.